What's up traders, welcome to Failure to Displace. In this video we're going to take a look at the London session on EURUSD just to see what opportunities were available for us to try and extract some profits from the market. Before we jump into the video, I want to introduce you to a new indicator that I stumbled across. It's not really an indicator, it's more of a visual aid to help us see the levels that may be of interest to us when we are trading. I fell across this from a YouTube channel called Nexus Blast, who seems to have a very similar trading style to my own, so I highly recommend checking him out for more details about how they view the market. And the indicator that was recommended was Session Range Highs and Lows Liquidity Tracker by Assam Julian. What this basically does is it shows us untapped and tapped levels of liquidity. So when we have a red line, it means the level of liquidity has been tapped, and a green line means that it's untapped. So how this indicator works, let's go back to yesterday's price action. Several really interesting things that it does. So first of all, light blue line marks out our New York midnight open. The indicator is going to show us our session highs and lows. So the blue line to this first grey line at 8 AM shows us the entire London range. So this is not to be confused with my own trading sessions, which is in this pink box here. So I have a sessions indicator by Lux Algo, which I use to highlight my own trading times. However, the liquidity tracker shows us the entire range of the London session high and low. Because these lines are green, it's showing that both the low and the high have been tapped. We then move on to the New York session from 8 AM through to 1 PM, which shows us the entire New York AM range. Again, now this is green, showing us that the liquidity from the New York AM session yesterday hasn't been touched yet. However, we have ran liquidity from the New York AM session high. Then likewise, we go to New York PM session from 1 through to 7 PM. This is all New York time. And then the Tokyo session, 7 PM through to midnight. Really useful for visualizing untapped and tapped levels of liquidity. These larger orange boxes are new week opening gaps. Now there's a few settings that I did adjust on this. I've left the session timings alone, so I haven't adjusted any of those. Time zone UTC-4, which is the New York time. What I have ticked is to extend unrated levels, which means my green zones are extended right across the entire chart, so I can see those as we're approaching them, and show history to maximum. So I'm showing as many levels as I possibly can, so I can always see where price is heading. I have disabled show fair value gaps because I use a fair value gap indicator by Nephew Sam, which I really enjoy. So I'm not showing fair value gaps using this indicator. I have put show new week opening gaps. So these are my orange shaded boxes here. And the amount is 6. So I'm showing back 6 weeks worth of new week opening gaps. ICT says that these are always good levels for a draw on liquidity. So I've kept them on the chart just as extra confluence really. I don't particularly trade new week opening gaps, but I do find they're quite useful just to see them on the chart. If we're approaching one or we're consolidating around one, it may give me some indication of where our price might go to next. So those are the settings that I've changed on this indicator. And from my initial testing, it works fantastic. So let's take a look at today's price action and see what we could have potentially taken part in. So we can see start of Asia session, we've broken out of the New York PM session high, we've taken the liquidity, but we've not closed back in the range, we're going higher. Asia's put in a high, we've just raided that in the gap time between our new Asia session and the open of the new London session. So we've swept this high, taken liquidity, pulled back in the range. So this would be a failure to displace, taken the high, pulled back in the range. So looking at that on the 15, we can see we have a green area of liquidity down here, which is our Asia low. So that significant level of liquidity, for me, price should be drawing to this level and potentially the PM session low as well, just down below us. So I'm going into my session with a bearish bias. I'm going to mark out the daily high as buy side liquidity because we have put in this swing high in the gap time. So another thing that I like to look for in my strategy is for the daily highs and lows to be put in within my own time frames. Like yesterday, the low was put in the New York session. So you generally find, in my experience, that either London or New York within this 12 candle window will put in the high or low of the day. So when I see a gap time high of the day, it always makes me suspicious that price may run back to take that to put in an official high of the day before doing any kind of reversal. So although we've closed inside this Asia range, this is still a suspect high because it was put in the gap time. The main volume for the trading will come in the London session or the New York AM session. So you would expect the high of the day more than likely to be put in within one of those two time frames. So I'm going to keep an eye on that buy side liquidity just up there. We're going to drop onto the 1 minute chart now as we go into the session, because that is what I will use for my entries. So using this indicator, we can still see that the levels are on our charts, so we know what we're looking for. Very bearish coming into the open of the London session. So we are sweeping down. We do have a bearish bias, which means I am looking for this liquidity to get taken out. So I'm not going to be trying to take any longs in the middle of this range. We want to be dealing on the extremes of the ranges. So just about to start London now. Monster pump, the open of London. It's taking us back to the high of the range. So again, no longs here. I know this is displacement, but it's displacement in the middle of the range where we don't want to be trying to take trades. So we're chopping about, we're pulling up now. So we've taken relative equal highs here. We've got 1, 2, 3 highs put in the gap time into a fair value gap. So if we pull back into this range and break structure, I would consider this as a possible 2022 entry at this point, if we start displacing back down inside the range. So we're just kind of hovering around the Asia high at the moment. So we've pumped up, we've taken the session high with a little wick. Pulled higher above the high. So again, I'm not going to be looking for any longs here. We're at the very high of the day now. So we are looking for a 2022 mentorship entry model. Our swing low for the break of structure is this bearish candle here. So we've had an aggressive move out of the range. We are now aggressively pulling back in the range. So again, this buy side is going to be converted to a failure to displace, because we are currently pulling back in the range. So we've failed to displace outside the range. We're pulling back in aggressively. Close back in. So we've left a fair value gap here with a balanced price range. So we've got a fair value gap on the bullish side, a fair value gap on the bearish side. Where the two overlap will be our balanced price range. So interesting level. What I'm going to do is highlight the 50% of this to see how this fair value gap balanced price range is respected. We still haven't had our break of structure yet, so there's no entry here. We've tapped the 50% of that fair value gap. We've tapped the balanced price range. Respected the balanced price range again with a big engulfing candle. So we can see we're getting more displacement candles to the downside at the moment, which is nice. Okay, so we've displaced, we've left another fair value gap. I'm going to delete that one. Fair value gap here. And then we are closing below for a break of structure. Again, with displacement. So we've displaced below that short-term low, and we've displaced below this low as well, leaving a fair value gap here. This would also act as a bearish breaker now. You would have expected this to hold price up. Price has come down and closed through it. We've now got a bearish breaker in play. Fair value gap over a bearish breaker. So these 3 consecutive candles could be our bearish breaker. Means potential entry there, I believe, is quite a strong entry for the 2022 model. Stop loss there. Stop loss would go above this high, so we're going to have to cover this fair value gap. So this is the new fair value gap in this new bearish leg down. So we're going to have to cover the first fair value gap and the second fair value gap. Entry based on this breaker. So if there was no breaker there, then I would be entering at the extreme fair value gap because I would want to be entering in a discount of this price leg. However, because there's a breaker here, this could act as all of the resistance that we need and drive price lower. Stop loss is going to be just above that high, as I say. I am going to take 50% of my position off at 1-to-1 to make me risk free without having to adjust the stop loss. So main things to note is we are closing back in the range. I'm not taking shorts outside the range. I'm taking shorts back in the range, looking for an entry here. Okay, so we've tapped the breaker. We are in the trade. Our fair value gap has been respected. Let's highlight the 50% of this fair value gap as well. Again, tapping the 50%. Respecting the 50%, more confirmation of a short. Closing through. Kind of consolidating a little bit here. Pulling back. 50%, just getting closed over, coming into the new hour now. So this is when you would expect things to start moving. Swept this liquidity that we'd manufactured in that first fair value gap, and we have tapped the most extreme fair value gap coming into the new hour. So this is one thing that I've learned from Stacey Burke trading is the 1 hour cycles. We can see massive injection of volume at the open of the new hour at 2 AM. We've pumped up and kind of consolidated towards the end of the hour. Now we're coming into a new hour. We've just touched a level of liquidity with a pin hammer. As the new hour's opening up, we are pulling away, and now we're seeing more volume coming in. So another fair value gap here. So you could have waited for the open of the new hour, which is something I have done in the past. We've seen a fair value gap here. This is now your silver bullet hour. So 3 AM to 4 AM is silver bullet. So we've got 2 now potential entries in play. We've just hit our 1-to-1, so we're risk-free on the 2022 mentorship model. We have had to sit through half an hour of consolidation, which would be very, very stressful. We're going to be targeting that untapped session low from Asia. If you'd come into the silver bullet hour now, you would see that we are closing back inside this range. Just using our indicator, we can see our closest green level of liquidity is down here. So that would give us our bearish bias for this setup. So we could take the entry now, open of the new hour, short trade on here. Stop loss above the high. 6.5 pip stop in this instance. And you're targeting the low for the silver bullet. Again, my own trading strategy, I would take 50% off at 1-to-1 to make myself risk free. So we're coming back in. Again, looking at this fair value gap, we've still got it on the chart here. It's respected the fair value gap. Pulling away. Price is now driving towards our 1-to-1 target. Again, respecting this 50% of this fair value gap. So if you didn't get in here, just look at your fair value gaps and look if the 50% is getting respected. This here, pull into 50%. The next following candle respected the 50%. You could take a second entry on the break of that low. So we've hit our 1-to-1 now. We are risk-free on the silver bullet trade as well, and we are targeting this low. Now we do have this swing low here, and I know for a fact, because I was also watching this, that many people would be looking for a reversal, taking this low. So this is sell side liquidity. This is basically the London low now of our session. It's not marked in green yet because the session's not closed. So really the target is the Asia low. You could be watching this, as I was, and seeing what happens at this level. So again, look how well respected that 50% is. Long drawn out silver bullet trade. See, outside the silver bullet hour now, so there's no trades here. You're just waiting for it to hit target. This is one of the nice times where taking 50% off and not going to break even is going to actually make you feel more relaxed. Both trades are risk-free, but you've got plenty of breathing space here, so these kind of pullbacks are not going to have you worried that you're going to get stopped out. I've seen time and time again in my trading career, price coming back, literally touching my entry by a tick, and then accelerating away. It's almost like the algorithm knows that us guys were all trading this and trailing our stops to break even at specific points, and it comes back and takes us out. So taking 50% off, making yourself risk-free, but leaving the stop loss, it just gives the trade room to breathe. And here we're approaching the session low now. We've touched the low. It's effectively taken liquidity, closed back in the range with a strong bullish candle. So this is where only a few short weeks ago I would have been thinking, oh, reversal, reversal, reversal. I will be looking for the 2022 entry based on a break of structure with a fair value gap. So that would have had me looking for an entry here. We have taken liquidity, we've broken structure, we've left fair value gap. Now in my head, only a short while ago I was thinking that's displacement. This isn't displacement. So we need displacement through that break of structure. And you can see we've wicked it, closed back in. So ICT has said time and time again, the wicks do the damage, the bodies tell the story. The body hasn't closed above this break of structure. This is not displacement. This is not a long position. So yes, we've swept liquidity, we've broken structure, we have not got displacement. The following candle closes above, it's not displacement. These aren't big candles. These are big engulfing candles. We can see them. These are small in comparison as we're breaking structure. So there's no volume here to take us higher. This isn't telling us that the market makers are involved and there's a buy program in place here. So don't get sucked into taking these kind of long positions, because as you will see, you just get smashed. And this happens to me again, time and time again. I'd be closing out and I'd be trying to catch a reversal, thinking I've got to break a structure. Totally wrong. Using this indicator, we can see our untapped session low is really the best draw on liquidity, which if we would hold out, gets tapped. And there we go. 2 trades in the London session. 2022 mentorship yielding you a 3.67 risk reward, and the silver bullet 2.4. Both quite drawn out, so this is not great price action. You would have to sit through quite a lot of back and forth to get your take profits, but there they are. These are the instances where it's best just to get yourself risk-free as quick as you can and then walk away from the computer. Don't come in, because you would see these pullbacks and be taking money off, or panicking and going to break even again, closing out because you just wanted to take some profit. Ultimately, the draw on liquidity was correct. You just have to be patient, wait for it to hit. So that's our London trading session. We are now at 5 AM, so our trading window is out. So even if we get displacement and a pullback in here, it's not something we're going to be trading because the session's over and we literally took our take profit at the death. So quite nice confluence there. So I hope that was useful for you guys. The indicator to check out is session range highs and lows, liquidity tracker, Assam Julian. Go and check out the Nexus Blast channel because their content is absolutely fantastic and does fall very, very closely to what I'm also trying to trade here on Failure to Displace. Give the video a thumbs up if you did find the content useful. Leave any questions in the comments down below. And please consider subscribing if you want to see more of this content moving forward. Thanks very much, and I'll see you in the next video.